the class with Mr. Romeo. What is the definition of markup and the definition of margin? In simple words, okay? If you can give us the definition in simple words. Mhm. Colleagues, sure. No one. No one. Okay, markup is the percentage added to the cost price to give you the selling price. The percentage added to the cost price to give you the selling price. And then margin is the percentage of the selling price that is your profit. Are we okay with that, colleagues? That's the layman. Markup is the percentage added to the cost price so that you can get your selling price. Okay, let's say, for example, your cost price is 75 kwacha and your markup is 10%. So you get 10% of 75 kwacha, that is 7.5 kwacha. You add 75 plus 7.5, that gives you your selling price. So markup is the percentage added to the cost price to give you your selling price. Okay. In margin is the percentage of your selling price, that is your profit, special gross profit to be specific. Percentage of your selling price, that is gross profit. All right. So if your selling price is 70 kwacha, that's what you're selling your good for, 70 kwacha. Your margin is 10%. So it means your profit is 10% of 70 kwacha, 7 kwacha. Percentage of, of profit earned from the selling price. Okay. If you've got 100 kwacha, you said if you sell goods for 100 kwacha and your margin is 25%, it means 25% of 100 kwacha, which is 25 kwacha, is your profit. Okay. Yes. Any questions? Because what you need to remember what these things mean so that if you encounter questions, at least you're conversant. So, colleagues, are we all clear with the definitions? Here, let me beam my screen again. Are we all clear with the definitions? Markup, the amount added to the cost price to determine the selling price. Okay. The amount or the percentage added to the cost price to determine your selling price. And then your margin, the percentage of your profit that you earn from your selling price. Percentage of profit you earn from your selling. Those are the two definitions. Yes. No, you won't be wrong. Because cost of sales is our cost price in this case here. It's very good you brought that up. So here, yes, here in accounts, your cost price is your cost of sales. Okay. Your selling price, sales revenue. So it's good, madam, you brought that up. Okay. Because as we're going to see in the questions that we're going to do, we'll be relating to that. So cost of sales is your cost price. Then your selling price is represented by your sales revenue. All right. Because remember, gross profit is sales revenue minus cost of sales. Okay. Yes. Then here's their official formula. Okay. Markup is gross profit over cost of sales times 100%. And margin is gross profit over sales times 100%. Okay. And then also I would like you to take note of these formulae here for converting. Where is this one? Yes. Please get this formulae down. If you want to get your margin from your markup equals margin over 1 minus margin times 100%. So here in this formula here, you're converting margin into markup. Okay. You want to convert margin into markup. This is the formula you use. Margin to markup. And if you want to convert your markup into a margin, you use this formula. Markup to margin. So we're going to look at some examples. All right, how we can use these in incomplete records. As I get screenshots of these formulae, okay, they will come in handy tomorrow. Okay, so we're going to look at some scenarios. Okay, the first scenario, we want to find sales revenue using markup. All right. So the question tells us that a trader uses a 50% markup. You can't see the screen like this. Okay. Today it's not the day of using a phone. Colleagues use laptops today. Okay. Yes. All right. So a trader uses 50% markup on goods. The cost of goods sold is 100,000. So we need to find the sales revenue. So remember, markup is the percentage that is added on the cost price to determine the selling price. So in this case here, it's the percentage that is added on the cost of goods sold to determine the sales revenue. All right. So we're going to say sales revenue equals cost of goods sold plus the percentage that is added on the cost of goods sold. So we're going to say 100,000 plus 50% times 100,000. What is 50% of 100,000? That should be 50,000. So the sales revenue is 150,000. And from this, we can get the gross profit. Remember, gross profit equals sales minus cost of goods sold. So 150, sales is 150,000 minus cost of goods sold 100,000. So your gross profit is 50,000. Any questions? So what pattern have we noticed here? Anybody to break down what has happened here so that the masses are following? Mr. Kasono, have you grasped the pattern that's going on here? Okay. So I'll repeat what happened again, all right? As we said, markup is the percentage that is added onto the cost price to determine your selling price. Okay. So in this case here, our cost price is 100,000. And our markup is 50%. All right. So if we want to determine our sales revenue, selling price, you just add your cost of goods sold plus the markup times cost of goods sold. Once you do that, as we did here, 50% times 100,000, we got 50,000 here. So this 50 is this extra cost that we're putting to the cost price so that we determine the sales. Any questions? Before we move to the next example, any questions? Okay, next, finding the cost of goods sold using the margin. All right. So here we've been told a business has a 40% margin and their sales revenue is 200,000. Find cost of goods sold. All right. So remember, margin is the percentage that represents your profit from your sales revenue. So here, the first thing you need to do is first you need to tabulate your profit. Once you have your profit and you have your sales, we'll just use this formula to determine cost of goods sold. Okay, so step one, you find your profit, find the gross profit. So that is going to be 40%, which is the margin of the sales revenue, 200,000. What is 40% of 200,000? 40% of 200,000, what value are we getting? 80,000. So this is our gross profit, 80,000. Here we want to determine our cost of goods sold. So remember, gross profit equals sales minus cost of goods sold. So if we make cost of goods sold the subject of the formula, it's cost of goods sold equals sales minus gross profit. So the sales, 200,000 minus gross profit, 80,000. So the cost of goods sold, 120,000. Any question? Hmm? Oh, those formulas I gave earlier on, those two. Oh, those are just the general formulae. Those are the general formulae. But in incomplete records, questions are going to come in this format. You rarely see them in those two formulae I gave you. Probably in multiple choice, you're going to see. The formulae is talking about are these ones here. Now, in the questions, they've already given you this. So it's already been calculated for you. Okay, sir? These have already been given to you. And with questions in complete records, you won't be asked to determine them. If they ask you to determine the markup or the gross profit margin, then you can use this formula. But if you see it's already given to you as a percentage, it means they've already applied this for you. Is that okay, sir? Yes, if you see markup 25%, then you know this has already been done for you. Unless the question has told you find the markup and find the gross profit margin, then you use these two. Yes, but here the formulae which I'm using mostly here are the ones from the trading account. Mr. Vincent, why are you surprised? These formulae which are using are mostly from the trading. Okay, no, sir, it's good you have brought that clarification now. Okay, it's good. Yes, colleagues, here the formulae that will be mostly used are the ones from the trading account. Okay, so you just need to remember what these things are. Okay, so that you will know how to tabulate from the information that is given to you. Okay, yes. Any other questions before we go to the next example? Mm. Yes, we're using the margin. No, because according to the information given to you, since there's no cost of goods sold, so if you bring the markup in E, you won't be able to tabulate anything. One for yes, for finding cost of goods sold, you need to use the margin through the sales revenue. I was about to say this. Yes, remember this trick here. Margin goes in hand with sales revenue. Markup goes in hand with cost of goods sold. Okay. Margin moves with sales revenue. Markup moves with the cost of goods sold. Then I think if you put it like that, things will become more clear. Markup is married to cost of goods sold, the I cap. Then margin is married to sales revenue. You cannot interchange these couples, okay? Because if you use markup and then sales revenue, it that relationship won't balance. And if you use margin when there's cost of goods sold, it's not going to balance. Mhm. And margin, yes, yes. But you can convert them into amounts like markup. After you get the percentage of cost of goods sold, that amount is your markup there. You can get the actual amounts from the percentages. So now those are just simple examples. Now here we're going to start putting other information so that because this is what you can expect to come tomorrow. Okay. So here we need to find the net profit and the markup is only known. Okay. A shop has the following: opening stock 20,000, purchases 80,000, closing stock 10,000 kwacha, markup 25%, expenses 15,000. Find the net profit. So here it's again like a puzzle. Okay. So colleagues, we're detectives today. We are solving puzzles. So here, what do you think is the first thing we need to do? As I put my phone on charge. What does markup work hand in hand with? Cost, cost of goods sold, yes. So first things first, let's determine our cost of goods sold. Okay. So if you remember in our trading account, okay, if we remember in our trading account, how do we get cost of goods sold? Who remembers the formula before I put it in? How do we find our cost of goods sold in our trading account? Uh-huh. We're adding purchases with what? Yes, you less closing stock, but we're adding. So I just say opening inventory. Okay, you add opening inventory plus purchases. This will give you a total cost of goods available for sale. Then you subtract your closing stock. Okay. So opening stock 20,000, purchases 80,000, minus closing stock 10,000. 20 plus 80, 100,000. Minus 10,000, 90,000. Are we clear here? Any questions? Any questions so far? Remember, we are moving step by step so that everything is okay. Um, yeah, I would I would say it depends on what the information is given to you. So in this case, if the information is given like this, where you need first get cost of goods sold, then your sales revenue, then you do this format. But I won't say there's a standard format for all the questions. It just depends on the information that's given to you, sir. Okay. Yes. So once we found cost of goods sold, we need to now determine our sales revenue. Okay. How do we get our sales revenue? I did it in example one. So how do we get our sales revenue? using the markup. This way. Okay, we use this because remember, definition of markup, it's the cost that is added to the cost percentage that is added to the cost price to determine your sales revenue or your selling price. So here, since in that question there we've got our cost of goods sold, we just need to get the figure for the markup. And once we add it to the cost of goods sold, that is our sales revenue. What is 25% of 90,000? 25 or 22,500? The 90 plus 22,500. 112,500. Any questions? So we've determined our sales revenue. Then now we can get gross profit. Hundred and 112,500 minus 90,000. 7,500. And then once you get gross profit, remember net profit. Minus expenses, the operational expenses. So our expenses in this question, 15,000. And they are in a loss of 7,500. We try a similar example. Let me just change the figures. We try a similar one. Yes, I can hear you. Uh-huh. Yeah, who gave me this 7,500? Someone said 7,500. And I just, it's not supposed to be 7,500. 22,500. Who gave me the figure 7,500? I remember it was a male voice. Yes. So have you seen this? No. Yes. So have you seen the steps? First, get cost of goods sold. Then you get your sales. Then your gross profit. Then your net profit. Yes. So here I've added more information here. All right. We've now added carriage inwards. We've added return outwards. We've also added now return inwards. Let's see what else. Yes, I think this comprises of a full trading account. So we need to find net profit. So, colleagues, what is the first thing we do? Mr. Vincent, what do we do here? Madam Sylvia, we have here question two. We need to find the net profit. We've been given all this information and with the markup, and we need to find the net profit. Before we go to sales, yes, calculate cost of goods sold. So cost of goods sold equals opening inventory plus plus what? Mm-hmm. What else? Mm-hmm. Yes. Yes. We are clearing this tomorrow. How many are attempting such questions tomorrow? Minus return outwards. Minus what? We're not yet done. Mm. Correct outwards. But if you see it's good you brought it up. If you see carriage outwards, where are you going to put it? Let me even add it here. Carriage outwards. Yes. Because we want to leave no stone unturned with these questions. So I think the most you can do is bring it like this. Okay, so let's tabulate. Opening inventory is what? 20,000 plus our purchases of 80,000 plus carriage inwards 500 kwacha minus return outwards. Return outwards 50 kwacha minus closing stock 10,000 kwacha. So colleagues, order of operations, board master. Oh, 100. Thank you, madam. Thank you. 100. Yes. So colleagues, board must see. Okay. So you start with he 80,000 plus 500 kwacha. 80. Actually, let's all tabulate the answers. Let's see what we get. We see those who know board mass. Are we getting 90,400? Okay. Let me just answer this call. Give me 10 minutes. Hello, I think. Hello? No, it's okay. It's okay. No, no, I'm glad. Thank you very much. I appreciate it. Yes. I love you. Bye-bye. All right, yes. So where are we? Where are we? Where are we? Yes, 100,000, 400 minus 10,000, we get 90,400. So 100,400 minus 90,004. Oh, yeah. Oh, wait, wait, wait. The answer is 90,400. So, any questions so far? We've got our cost of goods sold. What do we do next? after getting cost of goods sold. Yes, sales revenue. So what is 25% of 90,400? 22,000. Okay. Always remember, colleagues, markup is the amount that is added to the cost price to get the selling price. And 94 plus 22, 6, 130,000. How come it's only Madame Geraldine answering? Where are the rest? Mr. Chimunya, Madame Sylvia, Mr. Casono. Is Mr. Trumbo in here? Madame Betha, Madame Helen. So we've got our sales revenue, right? So we can now get our gross profit. So how do we get our gross profit? Yes. We just do this. Sales 113,000 minus return inwards of 50 kwacha minus cost of goods sold 90,400. Okay. 113,000 minus 50, then minus 9,000, 90,400. No, it's just 50 kwacha. Let's put it as 50. Final answer. Mhm. Mhm. Yes, yes. Let me also do my tabulations also here. 22,550. Okay, okay. No, madam. Eee! No, do not. Yes. Yes. Any questions, colleagues? Is this consumer friendly? Is this consumer friendly? Mr. Chimonya? When Mr. Chimonya is quiet, then you know things are not good. No, Mr. Chimonya, remember this. Markup, just remember this. Markup is the amount that is added to the cost price or cost of sales so that you get your sales revenue. Margin is the percentage of sales revenue that gives you your profit. Once you remember that, all of this becomes second nature. Okay, all of this becomes second nature. Okay, here's another. I would say this can be the last example for incomplete records so that we also go to other topics. Because the way it's looking, it's only Madam Geraldine and Madam Sylvia doing incomplete records tomorrow. We have this information here. Okay, a business has sales 300,000, have a margin 30%, opening stock 50,000, closing stock 30,000. We do not know what our purchases is. Okay, remember this is a puzzle. These questions are more like a puzzle. Okay. Yes. So here, what do you think is the first thing we might need to do? Here's a hint. We are remember this previous question, how we went from cost of goods sold to gross profit. Here we're now doing the reverse. Okay, this is just the reverse. So should Mr. Romeo bring something like this also? So first things we need to do, we need to get our gross profit, all right? Because remember, margin is the percentage of sales revenue that is your gross profit, okay? So gross profit equals 30% times 300,000. What is 30% of 300,000? 90,000. Okay. Once we've got our gross profit, we've got our sales revenue, we've got our gross profit, So we need to get our cost of goods sold because purchases is within that cost of goods sold. So we need to get cost of goods sold. So remember, cost of goods sold is opening stock plus purchases minus. Yes, is that a question? So opening stock is 50,000 plus purchases. Oh, not this formula here. Sorry, we're using this one. Gross profit equals sales minus cost of goods sold. We already have our gross profit of 90,000. We already have our sales of 300,000. So we need to get our cost of goods sold. All right. So we just we cost of goods sold crosses the equal sign. The 90,000 also crosses the equal sign. Remember, cost of goods sold is just your sales minus gross profit. Okay. 300,000 minus 90,000. 210,000. Then from now, since we've got our cost of goods sold, we can now determine our purchases. Opening stock plus purchases minus closing inventory. Make purchases the subject of the formula. So if we take everything, we opening stock, we cross it off. Closing inventory, we also cross it off. To be purchases, or put it like this so that people follow. To be cost of goods sold minus opening stock plus closing inventory equals purchases. Okay, colleagues, we've just taken opening stock over the equal sign, closing inventory over the equal sign. So cost of goods sold 210,000 minus opening stock 50,000 plus closing stock 30,000. Yes, what value do we get? Purchases equals 190,000. Yes.